Joining me tonight, I have a panel of crypto OGs, all who have been part of more than one bear market, to talk about the bear market and the denial of the ETF. I've got Simon Dixon, CEO of Bank to the Future. Simon, since you haven't been with us before, I'm going to give you the honors of going first. I asked Twitter who we should get on the show, and they were quite unanimous asking us to get Simon Dixon on the show. Who is Simon Dixon?
Well, I run BnkToTheFuture.com. I spoke at the very first Bitcoin conference in the world and wrote the first published book that included Bitcoin, and have invested in about 100 different companies in the industry.
How much money have you invested in the space?
Well, through Bank to the Future, we've invested $600 million in funding rounds listed on the platform, all in crypto companies.
Simon, this is not the first bear market we've ever seen, but is this the worst bear market you've ever seen?
I don't think so. It is. We have seen bear markets like this. I've personally seen my $30 Bitcoin crash to $3, my $1,250 Bitcoin crash to $250, and now my $20,000 Bitcoins crash to $5,000. It does appear that we are in a very similar market to the 2014 post-Mt. Gox market, where all news was bad. A lot of time was spent on building. But we're definitely in, we've had an extended 7-month period, and it looks very similar to the last time we were here around about 2014.
Simon, the difference between the 2014 bear market and the 2018 bear market is that in 2014, the market was very small. It was made up of a bunch of technical people. In 2018, we roped in a whole lot of retail investors, and the ecosystem is much bigger. Do you think that we can get the retail investors back into crypto?
I think the retail investor always comes in cycles. It's about understanding the economics of Bitcoin. The economics of Bitcoin state that every 4 years, the number of Bitcoins created every 10 minutes halves, which means that in 2020, we have the halving, and we normally have the year before the halving, you start to see the run up where retail investors come along, and I'm sure we'll have institutional investors that miss the boat joining the race as well.
So Simon, can we expect more blood on the streets, or is the worst over?
I would think so. I think you just got to, take a little symmetrical chart of where we were last time. It took us about a year and a half until the positive news and the building actually started coming through. I think we're now 7 months into that, so we're just over halfway. I'd expect a flattening. I'm not sure exactly where the bottom is. I would have liked to have seen a really big crash, and then, the buying pressure come back in. But at the moment, I think we're just going to have a flat market. It's gradually getting lower until we reach the point where the day, it's the day while everyone's still saying that Bitcoin's a scam, Bitcoin's a Ponzi scheme and a currency for drug dealers. That's where it always creates an undervalued opportunity. And we're still in that phase right now. So it's once those phrases when you stop hearing those phrases, that's when you tend to see a turnaround for Bitcoin.
Now, Simon, it's not all about Bitcoin. You've got a whole lot of ICOs and altcoins that came on the market, and some of them are trading at 5% of the value they were issued at. Is this the end of the utility token?
I don't think so. I mean, this was all sparked off by a Bitcoin bear market plus regulatory uncertainty. And as regulators started to step in the States, it took a lot of it overseas. What we're seeing is a new cyclical trend. And that trend is that during times of bear markets, people sell their tokens and altcoins and flee to Bitcoin or Tether as a way to, or some kind of stable coin. Because it tends to crash at a higher rate than the stable coin or the Bitcoin. And then during bull markets, you'll probably see that trend reverse, where people will seek higher returns in more times of certainty, and therefore they'll sell their Bitcoin in order to accumulate more tokens and be more speculative with those funds. So we're just seeing the altcoins and ICOs and tokens crash or pump a lot harder than Bitcoin, which is the world reserve cryptocurrency of cryptocurrencies.